Hello, entrepreneurs. Welcome to Positive ROI. My name is Yusuf, and in this little video, I'm going to show you how to maximize your business profits by introducing you to various business structures and highlight how you can benefit from each business structure and also provide you an example of how you can potentially save more money by changing your business structure. Types of business structures that exist. So there is a sole proprietorship, general partnership, corporations, and limited liability company. A sole proprietorship is a type of entity that is owned and run by one individual. Sole proprietorships are the most common form of legal structures for small businesses. Some of the pros, it's simple to set up. The owner of a sole proprietorship must raise all necessary capital alone, but has full decision-making powers. No public reporting is necessary. A sole proprietor needs only the basic financial knowledge to run the company and satisfy banks, vendors, tax collectors, etc. Among the cons or disadvantages, here in this case, income is taxed at a personal tax rate of the individual. This type of company is limited when it comes to deducting expenses and sheltering income. There is no legal distinction between the owner and the business. So if somebody sues the business, your assets could be seized, and you could be liable for it because there is no distinction between you and the business. Another form of business structure is a general partnership, which is an association between two or more people in business seeking a profit. Partnerships can be created with little formality, but because more than one person is involved, a partnership agreement should be created to deal with all issues that may arise in the future. A partnership agreement stipulates the terms of the partnership by formalizing rules for profits, loss sharing, ownership percentage, dissolution term, and um, and management's right, among many other things. So, among the pros of a general partnership, it's like a sole proprietorship. It is simple to set up. It is usually less expensive to form and require less paperwork and formalities than corporations. Partners can combine resources and share the financial commitment with each other. All income deduction and credits pass through to the individual partner and reported on their individual tax return. This could be both positive and negative. If the business is generating a lot of money, then it could be negative because it will push the individual to a higher tax bracket. Among the cons, general partners are personally liable for the business debts and liabilities, just like a sole proprietorship. The only difference is that you have a business partner, in this case, one or more. Each partner is also liable for debts incurred by the action of other partners. So in this case, you have to actually trust the person that you partner with, because they can rack up debt, and put you in unfavorable position if the bank decides to come after you because your partner can't pay the debt that he accumulated under the business. Um, and also, because of this potential personal liability, general partnerships are limited in their ability to raise money and attract investors. Investors don't want to invest in risky businesses that have a lot of liabilities, or a general partnership structure. Shared decision making by the partners, especially the ones that have higher shares, um, technically their decisions could overrule yours, and that could be less favorable than a sole proprietorship. Corporation Corporations are the most complex business structure. A corporation is a legal entity that is separate and independent from people who own or run corporations, mainly the shareholders. A corporation has the ability to enter into a contract separate from the shareholders. but it also has certain responsibilities, such as paying taxes. Corporations are generally more appropriate for larger established businesses with multiple employees, but it also could be a solution for a business that sells a product or a service that could expose the business to some liabilities. Ownership is designated by issuing shares of stocks, basically. Pros, personal liability protection. You have more protection than in a partnership or general partnership or a sole proprietorship. Corporate tax rates are generally lower than a personal income tax rate, resulting in significant savings at tax times. Easier access to capital. Corporations can raise money by selling stocks or selling bonds to investors that are interested in investing in the business. Among the cons or disadvantages of running a corporation would be cost of incorporating the business. Incorporation is more complicated than a sole proprietorship and a partnership. So naturally, it costs a little bit more because you might need to hire a lawyer to set up the appropriate corporate structure for your business and for your investors. It also increases accounting cost, since your business, if you incorporate it, it becomes a separate legal entity, and you'll need to file two tax returns, one personal tax return and one for your business or for your corporation. Also, it leads to an increased administrative work. Your corporation must keep up with up-to-date records that include a minute book, share register, security register, articles of amendment, and more. And that could cost you more money over time. Incorporating your business doesn't completely protect you from liabilities, and this is because some banks and some institutions, when they lend money to corporations that aren't publicly traded or big enough in size, they often want the owner of the business to guarantee basically the loan by putting their assets at stake in case the business struggles with paying its repayment obligations. So, limited liability company or LLC is another corporate structure. It doesn't exist in every single country. We don't have it in Canada. It certainly does exist in the US. And it is a hybrid company between a corporation, general partnership, and a sole proprietorship. Owners of an LLC are called members, and members may include individuals, corporations, or other LLCs and foreign entities. This business structure is only allowed in few countries and states, as I mentioned. In Canada, we do not have LLC, so incorporation would be the solution instead. So pros of LLC, you have the flexibility of being taxed at a sole proprietary partnership or S corporation or C corporation. These are two different corporation structures in the US. Less paperwork and lower filing cost. You can form an LLC with as little as one person, but you can also have unlimited numbers of people, obviously. Members are protected from some or sometimes all of the liabilities if the company runs into legal issues. Cons or the disadvantages of this structure. It is obviously, as we discussed, is not available in many countries. So you need to check with your chartered professional accountant and lawyer before you set up an LLC or try to set up an LLC. It also has a high renewal fees or publication requirements that can be pricey depending on your state, and that changes from state to state. If you are in the US, investors may be more likely to put their money into a corporation, which makes it harder to raise financial capital for LLCs. Many states have a franchise or capital value tax on LLCs, ranging from a flat fee to an amount based on the company's revenue. So now that you know the various business structures, how can you benefit from it? So by knowing the types of business structures that exist, you can potentially save yourself a lot of money. For example, let's assume you're running a sole proprietorship and your business is making over 100K in profits a year. And remember, in sole proprietorship, your business income gets taxed at a personal tax rate, or you combine your personal income and a business income in sole proprietorship, and you file your taxes together, which saves you um, money and time if the business is not profitable. But if the business generates more than a certain amount, you will end up pushing yourself to a higher tax bracket. So if you're based in Canada, like me, you'll be paying approximately 40% on your business income in this example, because 100K pushes you to a higher tax bracket. And in a higher tax bracket, you in Canada tend to get taxed at a 45% rate. But for this example, we're using 40%. So after paying taxes, you'll have roughly 60K left over to pay for your living expenses and to reinvest in your business and grow your business. Let's assume your living expenses add up to 45K a year. After all the taxes and personal expenses you pay, you'll have approximately 15K to reinvest in your business. Imagine just 15K out of 100K profit you made initially will be reinvested into the business. However, if you were to change your business structure from sole proprietorship or a general partnership to a corporation, you could save and reinvest double the amount you would do in a sole proprietorship structure. In Canada, a small corporation pays a small tax rate of 10 to 15%. Um, let's assume you've changed your business structure from a sole proprietorship to a corporation and your business earned 100K in profits, excluding your salary. So this is basically the same example that we walked through earlier, but this is under a corporation structure. So let's also assume that you plan to pay yourself a salary of $45,000 to cover your living expenses, which is similar to the previous example. After paying yourself a salary and paying your tax liability, you should have approximately 46,750 to reinvest in the business. How did we come up with that number? Now remember, this is a hypothetical example that uses approximate tax rates and hypothetical numbers merely to illustrate the point of how you could save money by switching your business from a sole proprietorship to a corporation, or in the US, from a sole proprietorship to LLC or a corporation, depending on what your chartered professional accountant recommends for you. But this is just to illustrate. So how did we get that number, the 46,750 that will be reinvested into the business? So the net profit before taxes was, or the net profit before taxes paid is $55,000. And how do we arrive to that number? So let's say your business made 100,000 in profits before salary expenses, before you paid yourself your salary, and then you deduct 45,000, which is your salary, you'll get 55,000 in net profit before taxes paid. And then you multiply that by 15%, and you get 8,250, and that is the taxes that you should be paying under this corporate structure here in Canada. So net profit of 55,000 pre-tax income minus 8,250 in taxes that you pay, you get 46,750 left over in the business to be reinvested in the business. So comparing the results between sole proprietorship and corporation in this example, taxes paid under a sole proprietorship is approximately $40,000 under a corporation, because obviously you pushed yourself to a higher tax bracket because your business income and your other income, if you work at the same time as you run your business, will be combined and taxed together at the same rate. So comparing the results between sole proprietorship and corporations, taxes paid under a sole proprietorship, with that example that we went through, is 40,000, because as a sole proprietorship, the business income becomes your own income and you push yourself to a higher tax bracket. In Canada, that is roughly 40% to 45%. So in this case, in this example, it shows the 40%. So you'll pay roughly 40%, which is 40,000. In corporation structure, taxes paid on $100,000 net profit minus your salary of 45,000 would come down to 8,250. That is the amount that the corporation would have to pay. But keep in mind that you also need to pay taxes on the $45,000 income that you sent yourself. So in this case, you do have to file taxes twice, or pay taxes twice. One for the corporation, which is separate from you yourself, and then one for yourself, the 45,000 that you received in this example. So in sole proprietorship, you'll have less money to reinvest into the business, and your higher income will push you to a higher tax bracket. And as a result of that, you will have less money to reinvest into the business after you pay your taxes and you pay your salary. In a corporation, you have more money to reinvest into your business. You don't have to pay yourself all of that profit all at once and push yourself to a higher tax bracket. Overall, you see that the results are more favorable in this example if you switched your business to a corporation from a sole proprietorship. However, one thing to keep in mind is that a corporate business structure tends to come with additional costs, such as more administrative work, filing taxes, sending documents, annual reports for investors, and more. That could make it unaffordable for a small business that doesn't make a lot of money. So now that you have a general background knowledge on the types of business structures that do exist, it is time for you to find out what best suits your business. And to do so, you need to seek professional advice from a chartered professional accountant in your jurisdiction or in your region, as they will be able to tell you what suits you best, because they have more knowledge. Because in the US, LLC might be a better solution for you than a corporation, because in the US you have different corporate structures, S Corp, C Corp, B Corp, and they all have different tax rules and tax criterias. So by speaking to a professional chartered accountant, they will be able to find a business structure that is best for you. And if you're in Canada, then probably going from sole proprietorship to a corporation is the solution for you. But before you do that, speak to a lawyer and an accountant and see that it actually suits your business, your needs, and it will generate some tax benefits, because sometimes it doesn't, especially if your business is not making a lot of money and you, as a corporation, have to pay a lot of administrative cost. That might have an impact on your business. So thank you for watching. If you enjoyed the presentation, don't hesitate to like and subscribe to my channel for more business and investment tips.